In the realm of finance, a new era is dawning. We need to know this. Bitcoin, a decentralized digital currency, has emerged from the shadows to capture global attention. In this video, we will discuss US government's bold plan on Bitcoin, which is kind of unexpected until recently. Welcome back to Clifford Fusion channel. If you like to hear more such content in the future, please subscribe to the channel and like this video. Thank you. Created in 2009 by the mysterious Satoshi Nakamoto, Bitcoin operates on a revolutionary technology called blockchain. Blockchain is a public ledger that records all transactions, ensuring transparency and security. Unlike traditional currencies, Bitcoin is not controlled by any government or financial institution. This independence has fueled its appeal, attracting individuals and investors seeking an alternative to the established financial system. The cryptocurrency's volatility, coupled with its association with illicit activities, raised concerns among regulators and investors alike. Despite these challenges, Bitcoin has persevered, its value fluctuating wildly, yet ultimately trending upwards. Governments are exploring its potential to streamline operations and enhance transparency. Financial institutions are grappling with its implications for the future of money and payments. And amidst this evolving landscape, the United States government is making a bold move, a move that could reshape the global financial order that we need to know. The United States, a nation built on innovation and a pioneer in the global financial system, is now turning its attention to Bitcoin. In a move that has sent shockwaves through the financial world, the US government has announced its intention to acquire a staggering 1 million Bitcoins. By design, Bitcoin has a limited supply of 21 million Bitcoins, a finite number. This 1 million coins purchase will be close to 5% of that amount, a staggering volume that will have significant impacts. This unprecedented decision marks a significant shift in the nation's approach to digital assets. This ambitious plan is enshrined in the Bitcoin Act of 2024. The legislation, currently making its way through the US Congress, outlines a strategic roadmap for the acquisition and management of this substantial Bitcoin reserve. The Bitcoin Act proposes that the US Treasury purchase 200,000 Bitcoins annually over the next 5 years, reaching the target of 1 million. This acquisition would be funded through a combination of measures. Firstly, the Act suggests the sale of a portion of the US gold certificates. This move, while potentially controversial, highlights the government's belief in Bitcoin's long-term value proposition as a safe haven asset. Secondly, the Act mandates that federal banks allocate a portion of their earnings, specifically $6 billion, towards the purchase of Bitcoin. This provision underscores the government's commitment to integrating Bitcoin into its existing financial infrastructure. The Act represents a significant departure from traditional monetary policy. It signals a growing recognition within the US government that Bitcoin, with its decentralized nature and limited supply, could play a crucial role in mitigating risks associated with inflation and geopolitical uncertainty. As the world watches closely, the Bitcoin Act of 2024 could very well set a precedent for other nations to follow, potentially reshaping the global financial landscape in the years to come. The timing of the US government's decision to embrace Bitcoin is not coincidental. This move comes at a time when the global financial landscape is undergoing significant changes, and the US is looking to maintain its economic dominance. Donald Trump's return to the White House in the 2024 presidential election has created a unique set of economic circumstances that have contributed to Bitcoin's recent surge. His campaign promises and subsequent policies have had a profound impact on investor sentiment and market dynamics. Trump's victory, unexpected by many, sent ripples through global markets, leading to uncertainty and volatility. This uncertainty has been a double-edged sword, causing some investors to panic while providing opportunities for others to capitalize on the market's fluctuations. Investors, seeking safe havens for their assets, turn to alternative investments like gold and, increasingly, Bitcoin. The appeal of Bitcoin lies in its decentralized nature and its potential to act as a hedge against traditional financial systems. Bitcoin's price, which had been hovering around $60,000 to $70,000 prior to the election, skyrocketed to as high as $106,000 in the weeks that followed. This surge was driven by a combination of increased demand and speculative interest, as more people began to see Bitcoin as a viable investment. Trump's victory speech, in which he reiterated his commitment to economic nationalism and protectionist trade policies, further fueled the rally. His rhetoric resonated with a segment of the population that felt left behind by globalization and saw Bitcoin as a way to regain control over their financial future. Investors interpreted his words as a sign that the US dollar, long the world's reserve currency, could face challenges ahead. This perception was bolstered by concerns over rising national debt and potential inflationary pressures. This perception led to a flight to safety, with Bitcoin emerging as a beneficiary of this trend. The decentralized nature of Bitcoin, along with its limited supply, made it an attractive option for those looking to protect their wealth. While it's difficult to directly attribute Bitcoin's price surge solely to Trump's election, his policies and rhetoric have undoubtedly contributed to the current bullish sentiment. The broader economic environment, shaped by his administration's actions, has created fertile ground for Bitcoin's growth. His skepticism of globalism and his focus on domestic economic interests have resonated with a segment of investors who view Bitcoin as a hedge against potential instability in the traditional financial system. This sentiment has been further amplified by ongoing geopolitical tensions and trade disputes. Trump's influence, whether intentional or not, has pushed Bitcoin further into the mainstream consciousness. As more people become aware of Bitcoin and its potential benefits, its adoption continues to grow, leading to increased demand and higher prices. His presidency, marked by unpredictability and a willingness to challenge the status quo, has inadvertently created an environment conducive to the rise of alternative assets like Bitcoin. As we move forward, it will be interesting to see how these dynamics continue to evolve and shape the future of both traditional and digital finance. Bitcoin, once a niche digital asset known only to a select few, has now become a household name. Initially, it was a concept that intrigued tech enthusiasts and libertarians, but today, it has captured the attention of mainstream investors and financial institutions alike. It has emerged as a formidable force in the global financial market, challenging traditional notions of currency and investment. Its total market capitalization, a measure of its overall value, now stands at an astounding $2 trillion by end of January 2025. This figure is not just a number, it represents the collective belief in Bitcoin's potential and its role in the future of finance. This meteoric rise places it firmly among the world's most valuable assets, a position that was once unimaginable for a digital currency. Bitcoin now rivals even established giants like gold and the S&P 500 index, showcasing its strength and resilience in the financial world. To put it in perspective, by some measure, gold has a market cap of $18 trillion, while S&P 500 index has $50 trillion. This remarkable ascent is a testament to Bitcoin's growing acceptance as a legitimate store of value and a potential hedge against inflation. Investors are increasingly viewing it as a safe haven, especially in times of economic uncertainty. Its decentralized nature, operating independently of any central bank or government control, has resonated with investors seeking alternatives to traditional fiat currencies. This independence is one of Bitcoin's most attractive features. The limited supply of Bitcoin, capped at 21 million coins, further enhances its appeal. This scarcity creates a sense of exclusivity and drives up its value, much like precious metals. Bitcoin's growing popularity is reflected in its increasing trading volume on cryptocurrency exchanges worldwide. Millions of transactions occur daily, with individuals and institutions alike buying, selling, and trading Bitcoin. This surge in activity has attracted the attention of institutional investors, hedge funds, and even major corporations who are now adding Bitcoin to their portfolios. Some prominent examples including hedge funds like Millennium Management, Capula Management, and Tudor Investment, asset management firm like BlackRock and Fidelity. Besides these, there are also crypto-focused funds like Grayscale Bitcoin Trust, RK Invest, and MicroStrategy, who have all made significant investments in Bitcoin. Bitcoin's emergence as a major player in the global financial market is undeniable. Its journey from a fringe experiment to a trillion-dollar asset class is a testament to the transformative power of technology and the evolving nature of finance itself. As Bitcoin continues to gain mainstream acceptance, its impact on the global economy is only set to grow. The future of finance is being reshaped, and Bitcoin is at the forefront of this revolution. The integration of Bitcoin into everyday transactions is becoming more common, with businesses and consumers alike recognizing its potential benefits. From online purchases to international remittances, Bitcoin is proving to be a versatile and efficient medium of exchange. The technology behind Bitcoin blockchain is also gaining traction. This decentralized ledger system offers transparency, security, and efficiency, making it an attractive option for various industries beyond finance. As more sectors explore blockchain applications, Bitcoin's foundational technology is set to revolutionize not just finance, but also supply chains, healthcare, and even governance. For instance, blockchain is being used to track the provenance of goods in supply chains, ensuring authenticity and reducing fraud. In healthcare, it is enhancing patient data security and streamlining medical records. Additionally, blockchain is being explored for secure and transparent voting systems and governance. The future of Bitcoin is bright, with continuous advancements and increasing adoption paving the way for a new era in digital finance. Its role in the global market is evolving, and its potential is limitless. Bitcoin's journey is far from over. As it continues to break new ground and challenge traditional financial systems, it remains a symbol of innovation and progress. Its impact on the global economy is profound, and its influence is only set to grow. The world is watching as Bitcoin carves out its place in the annals of financial history. As we move forward, Bitcoin's role will continue to evolve, shaping the future of money and finance in ways we are only beginning to understand. The journey of Bitcoin is a testament to the power of innovation and the relentless pursuit of progress. Its story is still being written, and its future is as bright as ever. As Bitcoin continues to gain mainstream acceptance, its impact on the global economy is only set to grow. Its journey from a fringe experiment to a trillion-dollar asset class is a testament to the transformative power of technology and the evolving nature of finance itself. What's your view on this development? Share your thoughts in the comments below. Until next time, thanks for watching.